Good morning and welcome to our AI discussion. This is the really hot topic. I was quite involved in the LEAP conference recently in Riyadh. There were 200,000 people there, apparently, and AI was the big topic under discussion. So this is really the topic du jour. We've only got a very small time to cover a huge range of topics. Let me first of all go around our panel, if I may. Isabelle Freidheim. Isabelle, you're founder and managing partner of Athena Capital. I think particularly Athena Technology is probably relevant for this discussion. Could you tell us more about Athena?
Yes, we're a growth equity fund, so we invest in private equity companies that are about to go public. So these are all tech companies, broadly defined tech. We take companies public. We've had a platform of SPACs. We've had multiple SPACs. We have taken European companies public in the US, US company public in the US. And AI, of course, is a big focus of ours across sectors. But we also invest, we take minority stakes in companies as they transition to being publicly traded companies, whether through SPAC or through an IPO or through an M&A transaction exit. And we also structure products, so structured equity products, structured debt products that we invest in to help companies optimize their capital structure as they exit.
Thank you very much. Maurice Gravier, Maurice, you are Chief Investment Officer, Wealth Management at Emirates MBD, a storied company in the Gulf, heavily involved in AI, both in portfolio management and investment research. Could you tell us more about your business in Emirates MBD?
Yeah, sure. So I'm very happy to be here. Emirates MBD is Dubai's largest bank. We are government-owned, but we are publicly listed, 30,000 people, something like $35 billion of market cap in 13 countries, and we're in charge of wealth management, which is a relatively new business line in the UAE, but we are growing. We are coming for you, Switzerland. I am absolutely convinced that we are the next Switzerland, and I'll be happy to tell you how we do stuff. And I'm Chief Investment Officer, so we do investment strategy, solution, portfolios, this kind of stuff.
Très bien, merci. Bill McAleer, you're Managing Director at Voyager Capital. Your lines of business, I think, are very relevant to our conversation this morning. Could you tell us more about your company?
Well, good morning. Let's hope so. So Voyager Capital is a venture fund that we focus on early-stage opportunities on the West Coast, primarily the Pacific Northwest. We're based here in Seattle. And we invest in three sectors. So we not only look at AI, which we'll be talking about today, but we also invest in what we call enterprise transformation, which are a lot of vertical SaaS software applications. And then the third area that we like to also talk about is technologies that disrupt industries. And today we think one of the interesting areas that we're looking at is ag tech, actually. The region I'm from, which is Seattle, is actually leading all of the major trends in cloud computing. We call the city the cloud capital of the world, unlike London. Our weather is actually worse than London. We also are leading many of the trends in AI. And this comes from some of our anchor tenants there that include Microsoft, Amazon, Meta, Google, all has significant offices in the region. So we're really excited about what's happening in this wave of technology and really excited to participate in it as well.
Thank you very much. Gareth Shepherd. Gareth, you're co-head of Voya Machine Intelligence and Portfolio at Voya Financial. And I think the possibility of combining fundamental analysis with quant techniques, turbocharged by AI, that's a fascinating combination.
Yes, it sounds like fun. And it's good to hear, actually, that there's a correlation between crappy weather and innovation. It gives me a lot of hope for this fine country. So I work for a firm called Voya Financial. It's not well known here, but it's a large US organization, about 500+ billion in assets under management, has a health division, has a wealth management division, has an investment management division. And I'm kind of in charge of helping to integrate AI across operations, in particular on the investment management side. By the way, if you're from the Middle East, because I know a lot of you are, there is a Voya. It sells soap. I'm open to offers from them as well. It's very similar branding, but it's a different company. So yeah, very happy to share on a very applied AI perspective how this stuff is actually being deployed in industries. That's what I'd like to add to the conversation.
Thank you very much. And, well, we're pummeled by questions daily, such as AI can take over the world, can it replace humans? So I'll talk perhaps to you first, Isabelle. You have a lot of different companies specializing in AI. Where do you see the particular areas of opportunity in this vast sector, and how do you seek out these opportunities?
So we invest broadly defined tech companies, and if you're an investor looking to get exposure and returns from AI in the somewhat short term, if you're not a professional venture capitalist looking to get a 10-year exposure to AI and returns, the best opportunities right now are in large legacy companies that are using AI tools to deploy directly to their bottom line, tools that affect their revenues and their profitability. So because we sit at the intersection of private companies going public, this is where we see right now the best opportunities in companies that are publicly traded, legacy companies, the IBMs of the world. As boring as they may sound, are really the direct applications of AI. Aside from that, we are still in the early innings of understanding what the possibilities are for AI. There will be a lot of winners, but also, of course, a lot of losers. At this point, from a venture side, it's very much a venture capital model. So there will be hundreds of losers for the one winner. And where we sit today, the applications, it's still a clumsy technology in a way. It was fun to play with image generation on your phone for 6 months, and then it became somewhat useless. So there are a lot of technologies that are trying to find solutions, a lot of AI tools that are trying to help companies, but it's not quite there yet. So unless you're a professional venture capitalist, it's really hard to identify what the opportunities are in these early stage companies. Now, we see a number of industries where there are more direct applications. We've done a lot of climate, EVs, but self-driving is an example of a very, self-driving software is a very actionable, very tangible and very immediate opportunity. Now, we're much more advanced in the development of self-driving softwares, so it's hard to get exposure and get the types of returns that you want from venture investments. But there are other areas, specifically in fintech and asset management, where we've covered a lot of fintech, but this is actually an area where we've narrowed in and are seeing opportunities that have existed for decades in quantitative trading, for example, but are so accelerated now. And to your point about the weather, we're seeing more and more of those concentrated time frames where you can really generate alpha from trading, for example. But it's true also for investment management and AI tools that will summarize research reports and then do the trading for you. So these are some of the examples, short term, of what we're seeing that might be more interesting to get exposure to in the context of venture, early stage investor or mid-stage investor, as well as, again, publicly traded companies, legacy companies that are right now using AI that will change the face of these companies.
Very interesting. Bill, could I turn to you? I mean, we've got great companies developing software, machine learning, natural language processing, and so on. And then we've got AI companies developing hardware, such as GPUs and NPUs. That's a bifurcation in the opportunity set. What companies are you looking at specifically?
Yeah, well, I think what we try to do is we put this into a framework, and because we're doing mostly software, we're not investing typically in hardware because we're looking at, for our fund size, we're looking at companies that are more capital efficient by its inherent nature. But the way we think about AI is very similar to how other trends have evolved in computing. And you have underneath this basically a hardware layer that includes chips, NVIDIA, et cetera. You've got another layer that's an infrastructure layer, and then you get the software layer, and this is where we tend to play. And we see two opportunities here. One is horizontal applications, which are much broader. And then we also see the opportunity in vertical applications. Now, if you take the software layer here, what is interesting is we then look at two types of AI implementation. One is what we call generative AI, which is essentially generating content, generating video, et cetera. And the other one is what we call discriminative AI. And this is where AI is making recommendations, it's making inferences, and so when we look at the core opportunities here, there's just a huge landscape, and I think to your point, it's still quite early. In fact, if you look at a BCG study that just came out on how corporations in the US are looking at this area, only about 9% are actually dipping their toes into AI at a corporate level, and about 90% are waiting to see how it's going to pan out. But what we are seeing, though, is initial disruption in some key industries. And I'd say what we look for are opportunities that are going to create revenue, have a strong value proposition, save money, and have deep AI underneath them. We're not looking for opportunities that are built on top of the platforms. And when we see the platform opportunity, we think that's going to be the Amazons, the cloud computing players in the world. Amazon has OpenAI. Microsoft has OpenAI, Amazon has Anthropic. So you see all these major cloud vendors that are going to provide the infrastructure layer. Where we think the opportunity is in these vertical applications that are improving how engineering is working, improving how legal is going to work, improving basically and disrupting the lives of what we call the early stage knowledge workers. We think that is where there's going to be a lot of interesting opportunity. We've been investing in AI for a long time because machine learning has been around for years. One of our most exciting companies is a company called Carbon Robotics. Some of you can go on YouTube and see the video. What these guys are doing, they're disrupting ag tech by providing a laser weeder that's a pole behind a tractor, and it's using AI to read the field, and it's using cameras to do that reading, and then it's using lasers to essentially zap weeds with 100% accuracy. The company's gone from 12 million to 88 million in 2 years. So this is an example of a very specific application for a very specific disruptive industry.
Very interesting. Many of us in the room are from the financial sector, of course. Gareth, what are the key challenges and limitations, do you think, of AI solutions in the finance industry? And how are you building on your really early adopter position in this sector?
Yeah, absolutely. Thank you. So, yeah, the world's changed pretty quickly, right? Like 3 or 4 years ago, people couldn't spell AI. Python was a snake. This was the world we lived in, and it's rapidly transformed. And so inside one of these legacy industries that Isabelle talks about, I can vouch for the fact that things are changing quickly. So just to take a tangent, trying to add some value to folks that are investors in the room, I'm a big believer of what Isabelle laid out, that a lot of the value capture of what's happening in AI is going to be in incumbent industries, where the boring stuff is. The hype, the hardware layer, that story is well understood. That story's done. But where the really fascinating stuff is happening is inside businesses, inside old industries that are transforming. And our business, investment management, is one of those. And to cut a long story short, we have built, rather than having a whole bunch of human analysts that, we used to wonder, why do you need a bunch of people in a room reading papers written by other people in a room writing papers? Why do you need all that? Well, you really don't need a lot of that. You can have what we've built is a team of virtual analysts, right? And virtual traders, et cetera, that can help do a lot of the heavy lifting. So you end up in an industry on the investment management side, which is way more efficient, way more customized to clients, and delivers a better result. And just to add one layer on top of the thinking, from our perspective, as a team that has, in a very focused way, in a small niche, built an investment management application, and I'm an AI guy, that's my caveat, I still believe that great human beings are really key to any of the difficult problems we're going to face. Not driving, not playing Go, but difficult problems. Being a physician, being a surgeon, being a lawyer, being a portfolio manager, being a pilot for that matter. There is always some element of what happens in real time that is beyond AI, and there's some part of the human brain that we don't understand fully that is able to make these logical leaps, these creative bursts, these inferences that is almost magic. And so as an AI engineer, that's my world, I'm long humanity on this, honestly, not machines.
Maurice, let's for a moment turn to the public markets. I mean, forget OpenAI and Anthropic. The wealth being generated in Wall Street on some of these applications is enormous. Hot server techniques, think Supermicro, think chips, Broadcom. Chip maker AMD has gone up 100 billion this year, considerably more than the total valuation of OpenAI. So the debate is now, there's been an incredible boom, but is this a bubble? Mm-hmm. What do you think about it? Are we going to have an adjustment in the market?
It's, of course, an interesting question. If you allow me, I will start to digress before answering this difficult question. First, I fully agree that AI in investment management is a lot about operational efficiency. People were not reading the quarterly reports from companies, analysts didn't. AI does, and does a summary, and we use that this way, and we have limited resources, so we're very happy to use AI, so I fully agree with that. Now to your point, we invest in listed markets, and we all know that the way listed markets deal with innovation is not very simple, because on one hand you have the hype and the risk of bubble, and on the other you have not a lot of clarity of the value chain. I mean, where is the value in the entire ecosystem? And we all remember I started as a tech analyst in '99, and God forgive me for having valued internet service providers based on the number of subscribers and this kind of thing. But it happens. See what telecoms have become, or whatever. So for AI, we don't use AI for investment decision. We use it to help us go to the decision. When it comes to the asset allocation and the decision, first, top-down, good news. It's about productivity, and we believe that the most of it is about operational efficiency, then competitive advantages in the adopters, rather than the enablers, which are subject to this bubble. If you look at these asset classes, it's equity, no doubt. It's not the case for every theme. Typically, the green transition, which is another mega theme for us, it's more interesting in fixed income. But for AI, it's in equity. Again, adopters rather than enablers. And to your question, it's about enablers. Is it a bubble or not? I think you need three ingredients to have a bubble. The hype, we have it. The hyperbolic price action, we have it, and then you need valuation to be totally disconnected from reality. And the good news for that is that I think this is still an open question, because we see differentiation. I mean, the market doesn't react the same way to a meta-announcing investment in AI. After crypto, remember Libra or the metaverse, we all use the metaverse. The market doesn't react the same way to that than to other kind of results. So we see a bit of differentiation. I think the jury is still open. We tend to look at, competitive advantages that last, and it's not easy, but we tend to trust a bit more atoms rather than bits. But maybe, I don't know, for me, the large language models in itself could be commoditized. It's what you do with it. I mean, maybe in the same way that we are talking blockchain, it's the same. The blockchain technology in itself, it's simple. It's what you do with it. So we are more in the enablers. We're a bit cautious because of this risk of bubble. We're not convinced it's a bubble.
Just a quick follow-up. I mean, how are you dealing with your clients? I mean, there's euphoria amongst the clients. Are you overweight? Are you underweight?
No, yeah, it's a good question. By the way, generative AI helps us a lot in communicating with our clients, and that's something I'm sure you're talking about fintechs, but our clients are across 180 nationalities. I have 12 nationalities in my own team. We are not all good English speakers, as you can hear, myself included. Communicating with clients is fantastic. The writing stuff, we're talking hours of productivity per week. Now I forgot your question. Yeah, for clients. In a moderate profile, we have 40% in equity. We like emerging markets. If there is one cheap AI play, according to me, it's China. I know it's not very popular, but China is well advanced in AI. I'm talking about listed markets. For the enablers, we're a bit cautious and we prefer hardware to software, but for the adopters, services, IT services, the coding assistant are something that the productivity gains are shocking. And we can easily see 30, 50 basis points of margin improvement, next year, not in 10 years. And that's where we are, yeah.
Thank you. Isabelle, if I could, you were kind enough to introduce the topic of financial assets and AI. I mean, you know, we can talk about fraud detection, risk assessment, algorithmic trading, huge number of sectors in the financial world that can have AI applied. Could you tell us a bit more about your thoughts about that and your emphasis on some of these sectors and perhaps build on your earlier discussion?
I do want to touch to your point about, is it a bubble?
Yes, oh sure.
So if you look at this panel 30 years ago, we would have been talking about the internet. How is the internet going to affect our productivity? How is the internet going to affect the bottom line for large legacy companies? And over time...
If the panel happened, there'd just be no audience. That would be the problem. That's what we...
But over time, technologies evolve and are adopted in ways that where there's a reduced marginal utility in the investment and the dollar that's being deployed into the technology, especially from venture capital funds. So is it a bubble now? There's definitely, their valuations are high when it comes to AI companies, but if you look at the evolution of each of those technologies, and we've covered fintech a lot, fintech was 10 years ago investing in companies that had breakthrough technologies, payment processing, investment tools. And if you look at where fintech is today, the valuations are so depressed in the public markets, for example, because those technologies are not breakthrough anymore. They're off-the-shelf technologies. And they're easy to replicate. Anyone can launch a fintech company. Anyone can launch a payment platform. So they become marketing plays. They become a marketing investment in marketing teams. How well can the company grow by marketing the technology? And that is what is a risk in AI, where AI will eventually, when you get to the point where you don't need to hire engineers to create or incorporate AI into your company and you can do it yourself, just like the way you can build a website yourself, that is really when you know that you're at the tail end of the bubble and there's less of an investment opportunity to create the types of returns that we've seen with the internet, with Google, Facebook, Amazon. Right. Again, I forgot your original question as well. But
well, we can stick,
Bill,
we can stick to the bubble
with amazement,
question.
We're getting towards the end of our time, which is just horrifying the way the time has flown. But you've touched on it as well. I mean, there are plenty of other sectors, obviously outside the financial sector. I mean, we're healthcare, automotive, retail, cybersecurity, and so on. How do you drill down and identify the sectors you want to invest in? Is it a bit opportunistic, in fact? You look at things as they come along, or are you specifically working on certain sectors?
Was that to me?
That was for you, Bill, yeah.
Well, I think what we try to do, first of all, I do think we are in a bubble. This is not unusual. This is what we saw in the internet time. And, ChatGPT has really popularized AI just like the browser did. In the internet world. And this AI had been around for a long time, and the internet had been around for a long time.
And Netscape is dead.
And Netscape's not around for much more. But I think when we look at the opportunities, what we're really focused on are opportunities that are built for a specific industry. As an example, I think you were referring to the engineering, Today, in software engineering, the stat says that about 60% of developer organizations are using AI to generate code. So here's a very early adoption area. But they're one of the hardest folks to market to as a company because they get inundated with ideas and solutions. So when we look at opportunities, we're looking for something that is unique, that has deep value proposition to the buyer, and then third has some really good underlying technology, not just built on the layer of OpenAI or the layer of Anthropic, but we're really looking for something that's built, that has that fundamental technology underneath it, but is solving a fundamental business problem. And this is a huge wave. This is going to be probably the most exciting wave in computing that we've seen in our lifetime. And it's still very early.
Well, we're practically at the end of our time, which is just amazing. And I've just got one last question for each of you. Isabelle, first of all, what was the best AI investment you've made in the company so far?
I'm the co-founder of Magnify, which is an AI company that has a search engine for financial products. So we were early in the AI game, and our technology facilitates the search using natural language for for financial products, ETFs, mutual funds, single stocks, and we from there on built a brokerage platform. So by far the best investment.
Sounds pretty good. Bill, what's the best investment you've ever made?
Well, I mentioned it earlier. One of our investments is this company called Carbon Robotics, which is still early, but it's doing about $85 million in revenues in 2 years. But another one we did is a company called Wellsaid, and what they do is they replicate voices with 100% accuracy for specific business applications. So they're disrupting what was the old voiceover market, where you'd have an actor come in and do the thing in the studio, which costs a lot of money, took a lot of time. We can do this instantaneously. So those are two examples of companies that have some deep AI in them.
Thank you. Maurice, you know what I'm going to ask you. What's the best recommendation you've made to your clients in terms of AI investment?
It's about being diversified, because again...
Off the record.
No, again, at this stage, it's difficult to, Nokia and Yahoo were the Apple and Google of their time, and it's about being diversified and measured. It's broad impact on the economy, so that's the good news.
Gareth, what do your models, your quant models, tell you should be investing in?
Oh, wow. So, they're leaning against the crowd, actually. So much more interested in emerging markets, international investments, commodities, the less sexy stuff. So if you want a takeaway, the humans are excited about the sexiness of the machines, and the machines are meh, and investing in old industries and commodities and things like that.
Well, fantastic. Well, look, thank you very, very much. We could have gone on for much longer, I think. But could you give our panel a big hand? Thank you very much.